Right. So first, I'd say just from the data today, this ought to be able to convince people at the Fed who were on the fence about doing a rate cut. This really does speak in terms of it's time to start adjusting interest rates downward. I think it still fits within the this is a risk. There are a lot of reasons that job growth could be slowing because of labor supply, and it is very consistent to see that. And the unemployment rate tick up. Not, it's not jumping up, it's moving up. But this really does firm up the case that Powell made in Jackson Hole and Chris Waller has been making about it's time to start cutting. But I still think this data is in line with a gradual pace of cutting. The data that we will get next week on the annual revision, that is a preliminary estimate for the level of employment in March of this year. So it really is not going to tell us anything about what's been happening in recent months when we've had this, slowing in job growth, because the policies have changed so much since March of this year. So it's important information. We'll be watching it. But in terms of kind of adjudicating what's happening right now in the labor market, it's not going to be that helpful.
Paul, the 2-year yield almost back to those April low yields.
Yeah, I'm keeping an eye on that, Tom. Claudia, to the extent that this data today maybe does prompt this Fed to move in later this month, how do you think the cadence of their subsequent moves will be for this Fed?
The cadence is going to come off of the data. I think we have to remember we are still in an environment where inflation is elevated, and we are likely to see CPI prints that firm up in the coming months. So I still think in a best case where the economy is just moving along, we're in a slower growth place. So this is not, a super place to be, but we're probably going to have some push and pull of the employment data and the inflation data. And so I don't necessarily think we're set up right now for a full cutting cycle, but the data will drive on this one.
We welcome you across America, around the world. It is Bloomberg Surveillance on YouTube. Subscribe to Bloomberg Podcast for your office, for your home as well, growing each and every day. Somebody emailed me, Tom, we listen to YouTube in the car.
Do they?
They do it through their cell phone.
Okay.
I don't know. I mean, I only got an iPhone 5, so it doesn't work, but they do it on radio across the nation. Traditional 99.1 FM Nathan Hager Radio. Good morning in Washington, Labor Secretary coming up. And of course, 92.9 FM in Boston on this Jobs Day. Equities sustain pretty much where they were 2 hours ago. The VIX 15.05. Paul and I watching that 2-year yield really getting back to the September 24 and April 25 lows. We'll see where we go from there. Paul?
So, Claudia, the Fed, obviously data dependent, as we know, but now they also have to deal with maybe some outside external political pressure. How do you think that's affecting this Federal Reserve these days?
In terms of the decision that they'll make in September, it should not be affecting them. They're going to look at the data. They still have a majority of people on the FOMC that are, adhered to, and they all unanimously agreed to their updated framework last month. And that's all about data and all about looking at these risks. And so in terms of the decision, I don't think that changes anything one iota. In terms of the concerns in and outside of the Fed, they are just, off the charts right now. Like this really, the Fed could be a very different Fed in not even a year from now.
Okay, Claudia, I got to ask you this question, because you're probably the only one I know who read cover to cover A History of the Federal Reserve, Alan Meltzer, 1913 to 1951. Did you read that entire book?
It's a very good book.
She's the only one I know who read like 1,500 pages. Here's my mail, okay? My mail is this. Tom, you idiots, you fancy urban idiots in bow ties, we're in recession. How do you interpret, Claudia, the percent of America that is living recession right now?
So, this is a tough one, and it's really a question not just for the Fed. There are demographic groups that have unemployment rates in the best of times that look like recessions for other demographic groups. We have some real structural problems and differences in our economy. The Fed's tool with interest rates is a really weak tool. So the best thing they can do, and it helps everybody, and particularly those on the margins, is to keep the economy as stable as possible, keep inflation low, keep unemployment low, and that is their mandate, but that's a bigger mandate that goes beyond the Fed.